Good afternoon, everyone. I hope all of you are well. My name is Laurence Difelice. Welcome to my daily update on financial markets and investments. From a global perspective, today I'm going to talk to you a little bit about what's going on in the US, Europe, and China. Both the American, European, and Chinese stock market have opened tipping downwards. What does this mean, and what is the key reason? Well, the common consensus, according to Financial Times, seems to be that markets are on hold ahead of the US earnings season. What are companies going to report during the coming days/weeks? How have the disruptions on supply chain have affected the costs that these companies have, and how will this be affecting, or how will this have affected their profit margins? This is a very interesting topic, and I'm super excited to see what is going to be announced during the coming days and weeks. That's all from a European and American perspective. Even the European markets seem to have also their eyes posed on what America is going to announce during the coming days, weeks. This is my interpretation, and this is what I'm believing it's happening from a global holistic perspective. If we look at China, there's a bit of a positive news after all the regulatory scrutiny that Jack Ma from Alibaba has been facing during the last years, and this is that some legal settlements have come to an end regarding agreements that Alibaba was having with some of its merchants. So I think this is great news for Jack Ma's Alibaba. I think Alibaba has been a bit of a, loudspeaker for China in terms of how they are controlling the big tech corporations and regulating them. And to a certain extent, I think this is very important, even if a bit unfair towards Jack Ma and his firm. But I think it's necessary that a market that has the size of China to be increasingly regulated, and this is what has happened. Also, from an IPO perspective, I mentioned in some of my previous videos that a lot of tech companies were deciding not to go public on the Chinese stock market. And the reason for this is regulation. I think this is a short-term pain, but I think in the long term, this will be great for the Chinese stock market efficiency. And again, China is much bigger than the US, but currently there's much more volume in the US stock market. Could we see in the future, or not so in the future, the trade volume of the Chinese stock market overtake the US stock market? One of the reasons why the trade volume in the US is bigger than the one in the Chinese stock market, it's because the US stock market has been around for more years. So these are some interesting points from a Chinese economy perspective. Finally, giving you a bit of practical wisdom for your investments. I'm going to share with you one rule of thumb that I have learned and tried to apply in my investment life, which is: do not sell an investment when you have to. Never do it when you have to. Do it when you decide to. And the difference between these two are that when you have to, you probably have emotions involved and you have urgency involved also, because you need that cash conversion quickly. However, when you decide to, your more rational brain will be working, and you will be sticking to the plan that you have designed when deciding to make an investment. And more often than not, rational decisions are much better than the emotional ones. I'm not saying you should have absolute emotional detachment, but the point I'm trying to make is that if you are needing to sell something, more often than not, you will make a bad deal. If you decide rationally to sell something, more often than not, you'll make a great deal. And even if you had to sell an investment and during a long period of time, that has proven to be in the right moment that you've sold that investment, this doesn't necessarily mean you were a great investor, because this means, number one, you had luck. Number two, you did not stick to your investment principles. So keep in mind always the 4 points I share. One of them is stick to the rules that you define. And normally these rules are subject to a time frame and not to a need or requirement for cash time frame. So I hope this is clear for you. I'm going to break it down once again to make it real simple. If you have an investment, sell it when you decide to, or when you have previously set rules that foresee a selling date, but never sell an investment when you have to. All of us will reach points in life that we need cash, and then we will be selling the investments that we didn't want to, but we had to, and more often than not, this is a really bad thing to do. So guys, I hope this was useful for you. I hope you enjoyed it. If this was valuable for you, please drop a like, please drop some comments, please subscribe to the YouTube channel. And again, remember, this takes a lot of time and effort from my side. So if it's valuable for you, guys, takes 1 second. Drop a like, drop some comments, share it with your friends, family. Have a great day. I wish you the best. Thank you.